Hey guys, and welcome to today's video. So in today's video we're going to be talking about how to catch explosive move in the forex financial market. So in today's video I'm going to be showing you a very quick way and a very easy approach on how to be able to catch explosive moves in the forex financial market on an intraday basis. You know what I'm saying? So stay true to the end of today's video and I'm going to be showing you a tool and how you can actually apply that in your chart going forward. So this is a markup here I have on the GBP USD. I'm going to actually come back to analyze this particular trade, and that will be at the end of the video. So if you want to see this particular trade, this is actually Thursday's trading, which is the 12th of January. Also stay true to the end of today's video, but make sure you keep the like button and hit the subscribe button, and let's get started. So if you've been trading the financial markets for a while, you actually know that the forex pair you're actually trading tend to move more in an average daily range compared to some other days. Like for instance, now on Monday, you can see the pounds move relatively like 250 to 500 pips, and from Tuesday you can start expecting something like 500 to 1000 pips on the pounds. Also on Wednesday, you can see the pounds go from 500 to 750 pips. You can see the pounds on Thursday actually go from 1000 to 2000 pips, and on Friday sometimes you can see the pounds actually just stay around 500 to probably 640 or 650 pips in a single day. So this tells us that we want to put our energy and focus on those particular days that the forex financial market will actually give us more move in the marketplace. And now when we talk about more move, all we're talking about is volatility. In other words, we want to stay in the market in those days. We want to approach the market those days that we're going to have more volatility, because when there are volatility, that means we have more moves in our favor. We don't want to be trading in tight consolidations. You understand? You don't want to be experiencing trading in tight regions like this. You understand? Or tight settles, like, because like here we have here, this is Monday's trading right here. I believe this Monday's trading. There's not a lot of move right here, especially when you look at it from the hourly perspective right here. There's not really like sorry, that's actually like Tuesday's trading rather. There's not probably like a lot of move happening in this particular segment of price action. You get it now. Except you have to diagnose down. You get, and even when you identify some of these days, you also want to pay attention to um how those setups are actually panning out. In terms like this is actually Tuesday. Actually expect more volatility in the pounds on Tuesday, but you can see that this particular Tuesday didn't actually deliver with so much move right here on the pounds. You get, and the main volatility actually came back on Thursday, which is the trade we're going to be analyzing at the end of today's video. So one way to quickly understand a particular pair, the kind of volatility you're expecting in the pair you are trading, is to use a particular website called investing.com right here. So you can see it right here. You just go to www.investing.com right there. www.investing.com. Just very simple. No hard and fast route to that. Just very easy. Just go to investing.com. And what you want to do is that you want to come to tools. Under tools, you want to go to forex volatility and tap that. So when you tap forex volatility, you're going to get a page just like this. And right here you see calculate um over past, you fill in the how many weeks you want to calculate. So I like going with the figure of 12 weeks, because that tells me in the last 3 months, which covers a quarter of a quarter data of trading in a given year. It tells me, okay, what the price has actually been doing in the past quarter. You know, in terms of volatility. So what you want to do, that you want to put in 12 right there. You can also put in 24 or 18, something like those kind of figures, because you want to work within quarters. You get, then I put something like 12 right here. Then I click my pair pounds, for instance, and you can see it calculates that for me just straight away. So now this is on a daily, each day volatility, all the way from the 18th of December down to the 12th of January this 2023. You can see that we had more volatility in the pounds all the way from December 2022. On the 18th day, we had more volatility compared to now in the forex pair. And when we go for hourly volatility right here on the pounds, we can see that we have more volatility as regard the 13th, 14th, and 15th. This is actually during New York session and London session overlap right here. So we have more volatility in the pounds during these hourly trading sessions. Then when it comes to weekdays, day of the week, we can see that we have more volatility on Tuesdays, Wednesdays, and Thursday. Thursday is the major day that we have more volatility, and that explains when you come back to the charts why we can have more volatility on the pounds more on Thursday right here. You can see that though Tuesday is part of those volatile days, those days that we expect more volatility in the market, also Wednesday, but you can't compare that to um, Thursday's trading. You understand? Thursday actually offers more volatility in the forex financial market as regard the pounds. So we can go into the pounds on Thursday expecting to catch explosive moves in the forex financial market. And the data right here actually tells us that Thursday actually has more volatility coming into the pounds over the past quarter. You understand? So you want to go into the pounds, and mind you, this is not only restricted to the pounds. You can actually do it for other pairs. If you do that for the Euro JPY right here, you can see that the Euro JPY actually on Tuesday actually have more volatility compared to other days. Then followed by Tuesday will be Thursday. Then after Thursday, you can have I believe you go with Friday also, because it seems like Friday and Monday are actually on the same days. But if you want to actually catch more explosive move, you want to focus on Tuesday, then anything less will be on Thursday. So 2 days of trading. So I'm going to be explaining a particular portion of this trade, which I believe must have caught traders off guard, and that will be this particular low right here, this second low, because this move to the upside is actually the CPI news release. So price came down obviously and cleared out these double lows right here. So this was the liquidity run to the sell side, and price went up to take out liquidity on the buy side, and price eventually reversed. So now price reversed, but this particular region, price also reached for an area of liquidity here and expanded, coming back to clear out these highs. But the question is, if you zoom out, you understand, you zoom out properly, what area of liquidity is price actually reaching for by coming down to this area? Because you'd have expected it to drop into this particular void right here. The answer is that it came for a vacuum block, a variation of the other block called the vacuum block. You can see it right here. So if I remove this stuff right here, you can see um, that we have the vacuum block. Once we see candles closed, that is in close proximity in this way, that's the body of this candle is actually equal inside the body of this candle, or they are relatively almost at the same range, like almost like moving on a sideways trend, which is what you have right here. Then that becomes a vacuum block, because if you go down to lower time frame like the 1 hour, you can see for yourself. If I zoom in properly to that area, removing all this lipstick on the charts to get clarity, you can see that at the point there was a gap here, and that gap was towards the downside right here. That gap was towards the downside, and since a downside candle, that candle is going to be what? Black. That is terms in terms of my color. So that, if you trace that out in time, this becomes what? An order block right there. If you trace that out in time, you can see that that's what price actually reached for right here. That's what price actually reached for right here. Price reached for that particular vacuum block, and that's why you saw a second expansion to the buy side later on the CPI day, which was Thursday's trading this week. By the time of this recording, this Saturday, 14th of January. So Thursday this week, after the CPI news was out, we still had another bullish run again. Why? Because price dropped into this particular vacuum block. So this is something you can go forward and keep in your repository as a trader, or your arsenal as a trader, because to be able to gain sniper entries into the forex financial market. So I hope you find value into this video, and hope you can take this volatility idea and actually go forward to improve your trading and better understand the particular trading asset class or pair that you're trading, and help you actually profit in the forex financial market. Hope you find value. See you in another video.